Hey there, have you been keeping up with the latest economic news?
Oh boy, here we go again. What's the latest drama in the world of finance?
Well, the Federal Reserve has been busy raising interest rates for the past 2 years. They've been trying to combat inflation, which has been higher than they like.
The only thing I have been inflating is the air mattress for my pool. I wish it was the size of my wallet, but we ain't quite there yet. Doesn't raising interest rates have a downside?
Exactly. Higher interest rates can help slow inflation by making borrowing more expensive. This reduces spending and can cool off an overheated economy. However, it also means that economic growth can slow down, and it can even lead to a recession if not managed carefully.
Damon, so what's been happening in the economy with all these rate hikes?
Until recently, the U.S. economy was surprisingly resilient. Growth was steady, and consumer spending was holding up. But the latest unemployment data was a bit of a shock. The unemployment rate ticked up to 4.2% in July, which was higher than expected.
Time to throw a jobless pity party.
Don't be daft. For context, the unemployment rate had been hovering around 3.8 to 4% earlier in the year. This rise indicates that the labor market might be cooling, possibly as a result of the higher interest rates slowing down economic activity.
All this sounds like gibberish to me. Spill some interesting tea for once.
Well, that won't be too hard. The Bank of Japan raised interest rates for the first time in decades. They increased their short-term interest rate to 0.1%. This move was shocking because Japan has had ultra-low interest rates for years.
Are they crying rivers now?
Not quite, but it caused quite a stir. The Japanese stock market reacted negatively, with the Nikkei 225 dropping significantly. The unexpected move, combined with weak economic data from the US, led to a drop of over 5% in Japanese stocks.
Wow, that's a big drop. I wish my diet was this effective.
Absolutely. The global markets have felt the impact. Rising interest rates and economic uncertainty are causing sell-offs in both the stock and crypto markets. Investors are moving away from riskier assets, causing volatility.
Now we are finally talking about something fun and interesting. I almost fell asleep listening to you blabbing.
Well, cryptocurrencies have taken a hit as well. Bitcoin, for instance, dropped below 50,000, reflecting the broader market sentiment. Ethereum and other altcoins have also seen significant declines. The market capitalization of the entire crypto space has decreased by over 20% in recent weeks.
Losers! I knew it would never last. I must say, though, it does come as a surprise.
Cryptocurrencies are often seen as high-risk investments. When economic uncertainty rises, investors tend to move their money into safer assets like bonds or cash. Additionally, the increasing interest rates mean that people are less inclined to invest in speculative assets.
So that's it, right? We are doomed.
Not necessarily. While the situation seems challenging, it's important to remember that financial markets are cyclical. Historically, there's often a seasonal dip in the crypto market around this time of year. Many experts see this as a normal part of the market cycle.
Well, I say think twice before you hop.
Exactly. While the current economic situation is tough, markets have a way of bouncing back. The crypto market, in particular, has shown resilience in the past, bouncing back after major downturns. Investors just need to be patient and stay informed. It's all about riding the waves and waiting for the recovery.
Music to my ears. Here's hoping for brighter days ahead.
Absolutely. Let's keep our fingers crossed and keep learning about what's happening. The more we know, the better we can navigate these economic tides.
Wise words, my friend. Thanks for the chat.